Good morning, sir. My name is Danijie, number metric 27073. So now I would like to share about the introduction about the crisis economic in Malaysia during 2008. The financial crisis is mainly about the collapse of stock market, the destruction of bank credit relation, and the emergence of a large number of bankruptcy of financial institutions. At the same time, the currency depreciated heavily and occurred inflation. The 2008 financial crisis came from subprime mortgage crisis in United States. At that time, Bank of America issued a large number of loans to buyers of subprime credit. As the interest rate increased, the collapse in housing prices leads to the default rate increase, which ultimately leads to the outbreak of subprime crisis. The United States subprime mortgage crisis eventually triggered the global financial crisis. During the global financial crisis, the economic slowdown in countries around the world and increased unemployment rate have caused an impact on everyone's life. The most affected people are those with lower income. Of course, our country's economic growth has also dropped significantly. Finally, our title today is to investigate the impact of financial crisis on Malaysia during 2008 with different sectors, which is in manufacturing, agriculture, financial, and also unemployment. That's all for me. Thank you.
Hi, my name is Tanusha Satyamurthy, metric number 270467. Now I'm going to present about the effect of crisis economic in Malaysia in 2008. I'm going to cover the manufacturing and also agriculture part. First of all, let's see the manufacturing part. Manufacturing. With the collapse of Lehman Brothers in September 2008, the accompanying global liquidity squeeze also affected Malaysia. The downturn in global trade adversely affected Malaysian exports, given Malaysians' high degree of integration with the global economy. All sectors of the economy, with the exemption of construction, would be affected more adversely this year, following the deepening of global recession. The manufacturing, trade, and tourism related services sector in particular are expected to report large contraction, especially during the first half as a consequence of falling global demand. The manufacturing sector is envisaged to decline sharply by 12.5% in 2009 from 1.3% growth last year, mainly depressed by falling output of export-oriented industries, particularly electrical and electronic appliances. The performance of domestic-oriented industries is also expected to ease following the deceleration in domestic consumption and investment demand. In the first 3 months of this year, the sector had charted a contraction of 15.6%, mainly caused by the 41.4% decline in electronic and electric appliances. Although manufactured goods accounted for 78.54% of overall exports in 2007, they declined to 74.1% in 2008. Agriculture. As the global financial turmoil intensified in the second half of the year, the large unwinding of long position by funds and the pullback of financial institutions caused commodity prices to correct sharply, with prices of several commodities declining significantly from their peaks in the first half of 2018. This sudden rise and subsequent reversal in commodity prices has affected Malaysia as a major producer and exporter of many commodities such as palm oil, crude oil, natural gas, and rubber. Nevertheless, with the fall in commodity prices at the end of 2008, the earnings of plantation and mining companies were adversely affected. In the future, commodity prices, given the severe weakness in global financial and economic conditions, are projected to remain depressed in 2009. As a significant commodity exporting economy, Malaysia will be affected. Thank you.
My name is Nuraliana Najia binti Ripin 264333. Now I will present about impact on finance. Malaysia was largely untouched by the financial crisis up until the first half of 2008. In the second half of 2008 and the first quarter of 2009, the financial and economic environment worsened. We can see in this graph in the fourth quarter of 2008, real GDP increased only 0.1% year-on-year compared to 4.7% year-on-year growth in the third quarter of the same year. In the first 9 months of 2008, the average GDP growth was 5.9%. Capital flow. Since the second quarter of 2008, Malaysia has suffered from capital flight like other Asian countries. In the United States and the West, banks and financial institutions have reduced their international sector and concentrate on their home markets. We can see in this table with net financial and capital flow dropping from negative RM37.7 billion in 2007 to negative RM118.5 billion in 2008. There was a substantial decrease in funds flowing into Malaysia. The banking system, as domestic banks had marginal exposure to US subprime loan items, the effect of the crisis on the Malaysian banking system was relatively modest. During the decade after the AFC, domestic banks have also strengthened and developed large buffers. In this table, we can see the risk-weight capital ratio, which is RWCR, and core capital ratio, which is CCR, of the banking system were held at high levels of 13.1% and 10.6% at the end of 2008, respectively. At healthy levels, non-performing loans were they peaked at 18.5% during the Asian financial crisis. The ratio has since decreased to 2.6% in 2008. Nonetheless, given the poor market climate and the projected rise in unemployment, non-performing loans from the banking system are expected to increase. The total loan applications in the country showed a declining trend as domestic economic activity slowed down. For both the business and household sectors, loan application slowed down, but application from the transport, storage, communication, banking, insurance, and business service sector were maintained. We can see in figure 2, loan approvals have also fallen in line with the drop in total loan applications.
Hello, my name is Lalita Tyagarajan, metric number 270716. During global crisis in 2008, Malaysia faced various impacts. Asian countries including Malaysia began to feel the adverse impact of the global financial crisis toward the second half of 2008 and early 2009. With the slowdown in international trade, the jobs outlook is increasingly bearish. Malaysia's unemployment rate in 2009 is expected to reach 4.5% compared to 3.8% in 2008. About 33,000 jobs were lost in 2008, the bulk of which in the last few months of the year as the global crisis took a turn for the worse as Asia's key export market slipped into recession. Of the nearly 26,000 jobs lost since October 2008, 85% were in the manufacturing sector, with the electronic and electrical industry particularly hard hit. Exports in this sector fell by 34% in January 2009 from a year ago. Finally, in Malaysia, the impact of the crisis on unemployment is not as worrying compared to other countries. To counter the impact of the global financial crisis on Malaysia's economy, the government introduced economic stimulus packages to rise spending and stimulate domestic demand. At the same time, Bank Negara Malaysia introduced an expansionary monetary policy by reducing interest rates. Like in other countries, to counter the recession, the Malaysia government unleashed two fiscal stimulus programs amounting to RM 67 billion, roughly 10% of GDP in 2008 and 2009. On 4 November 2008, the Malaysia government has administered a first expansionary fiscal policy. For that, Malaysian government announced the primary economic stimulus package amounting to RM 7 billion. The second stimulus packages in 2009 was seen as the biggest in history at a massive RM 60 billion. With the slowdown of inflation, there is more room for monetary policy to drive the economy by lowering interest rates. Bank Negara Malaysia cut interest rates thrice, totaling 150 basis points, and the overnight policy rate fell to 2% between November 2008 and February 2009. Meanwhile, the statutory reserve requirement has been reduced by 200 basis points to 1%.
So the conclusion is there are also lessons to be learned from the crisis in Malaysia. It is clear that in addition to the effect of the recession on the economy, the numerous government policy responses also have an equally important impact on the economy. It is really critical that this is known and taken into account when formulating strategies in the futures. Malaysia's experience with the 2008 financial crisis was very different from that of 1998. Malaysia was largely untouched by the financial crisis up until the first half of 2008. Level-rising unemployment is one of impact where many Malaysians lost their job. The second half of 2008, sector agriculture saw a rapid turnaround, with sharp falls in the prices of most commodities. So that's all from us. Thank you.